I started doing much higher returning deals. So instead of staying, a million five, we're doing $5 million deals that we're selling for 7-8 million, right? So taking on investor capital has been a game changer, but the commercial market is the best kept secret in real estate. The Wall Street Journal called strip malls the best kept secret in commercial real estate. So for 15 years, man, I've been trying to convince people to invest in commercial, right? Stop chasing residential, stop chasing multifamily where you have so much competition. I'm going to a conference in 2 weeks. There's going to be 2,000 multifamily investors there. Right? I mean, we don't have these conferences for commercial. Right? You get to learn from each other, and there's no good books written on commercial. There's no really good YouTube videos that teach you how to do this. For fix and flips, residential, apartments, there's all kinds of knowledge out there because it's textbook, right? There's a playbook already written on whether it's single family flips, multifamily syndication. There's, it's already out there, right? With retail, industrial, office, with retail, industrial, office, medical, ground up development, every deal is so different.
You're listening to the Accredited Investors Only podcast presented by Accredited Life.
Ash, welcome to the podcast. How you feeling today?
Peter, I'm feeling great, man. Glad to be here.
Awesome. Well, I'm glad you're here. So let's start with you introducing yourself. I'd like to hear you do it in your own words.
Yeah, Ash Patel, born and raised in New Jersey, went to school in Indiana, followed that traditional corporate route, got a degree in computer information systems, got an IT career, did that for 15 years, always had side hustles. I knew I'd never work for somebody forever, right? So I was hoping one of these side hustles would hit. And over the course of my 20s and early 30s, I may have had a couple of these side hustles that were taken off, and I would go in and try to quit. Well, I would walk out of my boss's office with a promotion, a raise, an assistant, right? One time I walked in, and I guess this is what you did back in the day, right? I mean, this is, 30 years ago. This is February. I walked into my boss's office, shorts, Hawaiian t-shirt, and a giant water bottle because I was so dehydrated from partying all night because I celebrated me quitting my job, right? And literally, I walked into my boss's office. He closes the blinds so that nobody could see how I was dressed. And he just, they talked me out of quitting again. Same thing, right? Promotion, changed my job around, assistant, more money. And I kept falling for that trap. I was in that corporate world for 15 years, and I went out. Finally, I started an IT consulting company, and I only did that for less than a year because at the same time, I went to my accountant and I said, hey, man, look, we've been paying a lot of taxes. My wife and I, we were both W-2 earners. I said, what can we do to offset taxes? And this guy just doesn't even look at me, Peter. He just grumbles. He says, if you make it, you pay it. And I'm like, come on, man, there's got to be a better way, right?
Yeah.
So I always knew that real estate had good tax incentives. I had no idea what they were. I didn't know how depreciation was calculated. So I just figured, okay, listen, let me take the reins, go out and buy some real estate. And the first property that I bought was a mixed-use building in a college town. Now, you may think, hey, that was really smart. It was actually really dumb. And the reason I bought it was because that grocery store that essentially was a giant beer store that sold, beer to college kids on college campus. They had about a year and a half left on their lease. So I thought when their lease is up, I can put somebody in place and have an additional source of revenue from the store income, right? And the 3-4 apartments above. Excuse me. So bought the building, renovated it. Another mistake that I made was I had these college apartments ready by the end of June. And school started towards the end of August, right? Perfect. Well, damn, man. I remember back in my day, we booked our apartments a semester ahead. So everyone that wanted an apartment for the upcoming school year, they booked January, February, March.
Sure.
Nobody's booking in August or July, right?
Yeah.
So my apartment sat vacant for one semester.
Mm.
Fast forward a little bit when I got tenants into the apartments. I remember I would get calls all the time. Toilets clogged. Excuse me. Toilets clogged. Sinks clogged. Holes in the wall. Stove doesn't work.
Sure.
So one day I was out there, Saturday afternoon, and unclogging a tenant's toilet. I look out the window and I can see the rooftop of the store. There's an HVAC company up there replacing rooftop units. So I go downstairs and I asked the store owner, I said, hey, what's going on? And the guy's like, gosh, our AC went out. So we're just going to replace the entire HVAC system. These guys put $30,000 into my building
Mm.
and they had a year left on their lease.
Wow.
And I got college kids destroying my apartments. Right. So that was a turning point in my life where I dropped everything that I was doing and became a full-time commercial real estate investor. And I've always asked this question. I've been doing this for 15 years now. I've always asked the question, why would anybody invest in residential? You have commercial tenants that improve your property on their time and their dime.
Mm. Yeah, that's a great point. That's a wonderful point. Well, wow, there's so many things to unpack there, and I think one of the first things that came to mind was your drive to be doing these side hustles while you were working, corporate and 9 to 5, that kind of thing, and probably beyond that too. I'd assume, there were some times where you couldn't get out of the office at 5, where you got in earlier. But where do you think that came from? Where do you think the drive to do those side hustles came from?
I think it was a combination of two things. One, growing up without a lot of money.
Mm.
And my parents brought us to a really good high school, so a bunch of rich kids in that high school, but we had the house by the railroad tracks, right? So seeing that was a good motivator. But this was during the tech boom. When I got out of college, that tech bubble was still building. So every day I'd watch TV, watch the news, and see another overnight millionaire just for having an idea, right?
Yeah.
Napster, if some of your listeners remember, just having some of this crazy ideas. Or if you just put a .com next to your woodworking company, you become a millionaire. I mean, it was that crazy, right?
Mm-hmm.
So I'm like, okay, what are these kids doing? I don't think they're smarter than I am. They're just coming up with an idea and pursuing it. So first side hustle was, I'm in IT. What can I do to capitalize on my skills? Why don't I start making websites? Because back then, websites were kind of an anomaly. Not everyone had one.
Sure.
So try to figure out how to build websites. They look like they were homemade. I'm not a designer, right? So I went out, I found somebody who builds websites during the day, and I asked if they wanted extra income. So I started selling websites. They started building them. It was a great thing that grew into a marketing agency in about a year. So that was one. In most of my side hustles failed in one way or another. But the other motivator, Peter, was I didn't want to work for somebody forever.
Yeah, that's a really good point. Would you, as you look back, would you say there's things that you learned during those side hustles that you've taken with you into your commercial real estate investing, or lessons and experiences and things you did right, things you did wrong, that kind of thing?
Yeah, there's a recurring theme with me where I give up 50% of my company because I want a partner. It's more fun. It's better to bounce ideas off somebody than make all these decisions solo.
Sure.
So I've made that mistake many, many times. I continue to make that mistake where, I believe in the philosophy where it's more fun to go together.
Sure.
Right? So yeah, giving up control of your company or giving up 50% of it, make people earn that. Right. I was so intent, and the mistake was made because I was so intent on building a company. And what better way to build than to start with 2 people instead of 1?
Sure.
So that was a recurring theme. The biggest, watch your cash on cash return with the tax implications. So no matter what you invest in, whether it's a startup, stock market, real estate, passive investments. There's one metric that's all you need. It's cash on cash return annualized with
Mm,
tax implications, right? So if you make $1 million on a flip, well, you're going to pay ordinary income on that. You can make 600,000 on something that you hold for 2 years, and it might be an equal amount of money in your pocket,
mhm.
right? So to all your listeners, the biggest metric, and this is what I teach, is cash on cash return annualized with tax implications.
Mm.
That's all you need.
Yeah, that makes a lot of sense. We'll dig into that in a little bit, but I'm curious. So, how has the commercial real estate investing business how did it evolve? From that, yeah, like you said, mixed use property to where you are today.
I went out and continued to buy heavy value add properties using my own money, which at the time wasn't a lot, maybe 100 grand total savings. So I would buy um, vacant retail buildings, or I would find drastically underpriced commercial buildings that were listed by residential realtors.
Mm.
Right. So
Sure.
a great example, strip mall that I got for $620,000, flipped it in a year for $1 million.
Mm.
And the only reason I held it for a year was for the capital gains tax, right?
Sure.
Um, but a lot of what I bought, a half finished office building where the developer ran out of money, strip malls with 50% vacancy, um, just things that needed a lot of work. I went in there, just added a ton of value, worked my butt off during those years, and finally grew into much larger properties. What changed was I started taking on investor capital.
Mm.
So for 10 years, I was so scared to take other people's money. And one of my family friends, good friend, is Joe Fairless. Every time I did a deal, he's like, "Hey, did you raise money for that?" I'm like, "Nah, man, I got this. Nah, I don't need it." And he's like, "Okay." And he got so tired of asking me if I raised money for it. Excuse me. He would just say, "Hey, should have raised money. Should have raised money." Like, hey, he asked me what deals I've done lately. I tell him, "Yeah, should have raised money for it." And I'm thinking, man, listen, you do you.
Mm.
I'm going to do me. Like, I don't need to raise money. But all along, I was lying to myself, saying there is this sweet spot of deals between $300,000 and $800,000, right?
Okay.
And that justified in my mind not taking the responsibility of other people's money.
Mhm.
Well, it wasn't until I saw, these high net worth friends of mine making the dumbest investment decisions ever. They're investing in early stage marijuana companies,
Mm.
crypto companies, bars, restaurants, and
Mm.
they were losing money on every one of these deals, right?
Mm.
So I said, okay, listen, let me set up a fund. I'm going to help these guys grow their money. I'm going to let them into my deals because for years earlier, they would always ask, "Gosh, if you have a deal, would love to come in." And my response was always, "Awesome, man. Thank you. I'll let you know if something comes up, but probably not."
Mhm.
So when I started taking on investor capital was really when I started doing much higher returning deals.
Mm.
So instead of staying, a million, million five, we're doing $5 million deals that we're selling for 7, 8 million. Right. So taking on investor capital has been a game changer. But the commercial market is the best kept secret in real estate. The Wall Street Journal called strip malls the best kept secret
Yeah.
in commercial real estate. So for 15 years, man, I've been trying to convince people to invest in commercial, right? Stop chasing residential, stop chasing multifamily where you have so much competition. I'm going to a conference in 2 weeks. There's going to be 2,000 multifamily investors there, right?
Sure.
I mean, we don't have these conferences for commercial.
Mm.
Right? You get to learn from each other, and there's no good books written on commercial. There's no really good YouTube videos that teach you how to do this for fix and flips, residential apartments. There's all kinds of knowledge out there because it's textbook,
Sure.
right? There's a playbook already written on whether it's single family flips, multifamily syndication. There's, it's already out there, right? With
Oh.
retail,
And
industrial,
then some. Yeah.
office. with retail, industrial, office, medical, ground up development, every deal is so different.
Mm.
Give you an example, Peter. We have, let's take one of our strip malls, $5 million purchase, and about 10, 11 tenants there. Every one of their leases is completely different, written by a different attorney in a different year.
Mm.
Some are 70 pages long.
Mm.
And there could be one paragraph in that lease that's $1 million difference
Sure.
value, right? So that's why, for whatever reason, people don't get involved in commercial.
Yeah. So you mentioned a couple different asset classes within commercial. What do you like? Are you kind of you'll dabble in everything, or is there something today that you're looking for more than others? You mentioned strip centers, and I'm curious, is that like your local, pizza store, nail salon, hair cutter, that kind of thing, or is that grocery anchored? What does paint the picture there for the asset classes and what you like today and why?
Okay, so what asset classes do I like? Um, you know, the funny thing is it's market dependent. So different times, different economic cycles, we have different asset classes that ebb and flow. In economic recovery, industrial's the last to come back, right?
Mm.
Retail's one of the first to reflect consumer spending.
Mm.
So as soon as an economy is going to start getting hit, that's where that pizza place, the nail salon, they start taking hits, right? But what do I like? I'm asset agnostic. I'll look at any deal if it's a good deal, or if there's a way we can add a lot of value to it. Um, so right now, we're in February of 2025. Flex industrial has been one of the hottest asset classes out there, right? There's all kinds of social media. Excuse me. We'll teach you how to build flex. We'll teach you how to buy flex. And it's a very easy asset class to master. It's no different than self storage, just bigger, right?
Mm-hmm.
So flex is getting to the point where in a lot of markets it's being overbuilt.
Sure.
So it's on a bit of a decline. Um, Retail has still just not attracted a ton of investors. So when we bid or when we put an offer in for a strip mall or some kind of retail facility, uh, we don't have competition. We don't get into bidding wars,
Mm.
right? You make a fair offer, you negotiate, and you sign the deal. So retail's always been great. And right now, people think there's a retail apocalypse going on. The Amazon effect, big box closures, Sears, J.C. Penney, Kmart, Bed Bath & Beyond, Rite Aid, all these stores closing. But what doesn't make the headlines, Aldi opening 200 stores, Dollar General opening 800, and the list goes on and on, right? Um, so retail is at the lowest vacancy in history. If you think
Mm.
about that, there's never been a better time to buy retail. It has the highest demand, lowest vacancy rate. And you look at apartments right now, they have declining rents nationwide. Some markets, they're double-digit rent declines,
Sure.
right? There's 1 million+ units coming online this year. And the argument to that is people say there's a housing shortage. No, there's not a Class A apartment shortage. There's a workforce housing shortage, right?
Mm.
So all these apartments that are being built because there's supposedly a housing shortage, not true,
That's a good
right?
point. Yeah.
Class A apartments are they're not a scarcity,
Mm.
right?
Definitely. Yeah. You can't look at it like in generalities like that, because like you said, it's there's big differences between A, B, C, and who can afford them and like how much is needed. So
Yeah. So we love value add industrial, retail. Um, what else would we mind? Office. Sorry, office is probably one of my favorites right now. So
and what does that look like? What's typical size and that kind of thing?
size we're pretty agnostic on, but location is important, right? We don't want city center, urban core office buildings unless you can absolutely steal them. We're looking at one now, class A- office building for $10 a square foot, which is insane because the build cost
Mm.
is $200-300 a square foot, right?
Yeah.
But where you want to be, Peter, for office is in walkable suburban downtowns. When COVID hit, everybody that was living in their little boxes in downtown city centers. They got tired of the lockdown and being cooped up. So they bought houses, right? They bought houses in the suburbs. It accelerated the growth into the suburbs. That young generation that lived downtown, they were eventually going to move to the suburbs just like their previous generations did. But COVID accelerated that. So that's why after COVID, all the new bars, restaurants, shops started popping up in suburban downtowns. So look for an office building in a walkable suburban downtown.
Mm.
People that want a 1 to 3 person office, those are on fire,
Mm.
right? Anybody who's owned them will tell you before COVID, during COVID, after COVID, they've had a waiting list.
Sure. Yeah, no, you're 100% right. Around here, it's very, very little vacancy on well-located office, even outside of those suburban kind of town centers. If it's just well located, it's right off of like your main drive, and it's not too big. Usually it's those football field size offices that are hard. You just need those larger leases. There's not as many players in the space right now that are looking to sign that kind of lease.
You hit the nail on the head, right? Nobody wants that cubicle farm feel. And you've got to do something to make your building appealing. It cannot look institutionalized.
Mm.
We also have a couple co-working facilities.
Okay.
So that's where, you don't have well, it's a combination of if you want your own office, you just pay a little bit more. Or if you just want to come in and work, use the conference room, fax machines, copy machines, whatever, you pay a different rate.
Mm.
So co-working, similar to WeWork, is very popular.
Sure. I'm at home right now, but we rent space in a co-working space, and before that, we were in a co-working space, and before that, we were in co-working space. So, and they're full. I mean, it's actually nice. I mean, it's nice to come in and see a lot of people, a lot of bodies, a lot of people moving around, that kind of thing. It's nice. What's the sandbox? So like, are you in your area? Are you looking in different states and different markets? What's that look like?
We'll look anywhere, but historically, we've purchased deals throughout the Midwest and Southeast.
Okay.
But open to most states as long as they don't have some crazy democratic rules, right?
Sure.
Laws that are just nutty. Not a fan of doing deals on the West Coast.
Yeah, that makes sense for plenty of reasons.
Yeah.
So okay, that makes a little bit more sense to me, because I wasn't sure how local this strategy was, because some of the, like, especially strip centers, like I know locally here, they're like gold. It's just like, if you were just going to focus in the Philadelphia suburbs, anything, it's gold. People get onto those, and then they never want to sell them. It's just because they just print money, and you never have vacancy if it's well located.
And they're easy to manage.
Sure.
Right. So we self-manage our whole portfolio, and I've got a team of 3 people, myself and 2.
Okay. I mean, that was going to be one of my next questions, was the management. So talk to me about that, because that has a lot to do with how you're structuring your leases. So explain that and how that works.
Early on, I would try to be an overachiever. So whatever our tenants needed, I would just show up on site. Yes, I can do this. I can fix this. I'll be attentive. I know you're supposed to change your HVAC filters, but don't worry, I'll do it. Over time, that became difficult to manage, right? And as I learned each lesson from every phone call received, I try never to receive that same phone call again. So now we have things in our lease where, even if it's a gross lease, the first $150 of any repair is on you. And the reason that came about was I got a call from a State Farm office in a retail building that I had. And they said their sink is clogged. Like, how? How does a sink get clogged in an office building? So I paid, I paid $300 for a plumber to go out there. And the guy's like, dude, all I did was pull out chunks and chunks of long blonde hair.
Oh, God.
And that was the State Farm tenant. She would comb her hair every morning in the sink. Well, okay, that's really stupid that I'm paying for a plumber to unclog that, right? So instituting little things like that are fair to the tenant as well. But then we have triple net properties, right? where you don't ever hear from them. They're responsible for taxes, insurance, maintenance, exterior structure, parking lot. So those are very easy to manage.
Mhm. Gotcha. So what's the advice to an investor that wants to get into this space? Because I would think, and it depends on your area, but like I was saying, like if like this, if the Philadelphia area, suburbs was your sandbox, it would be challenging to make a full-time career out of that. It would take time. I mean, you would have to work, your regular job and then, accumulate properties over a period of time. And it's harder to find some of those value add deals, that kind of thing. But as you open the world up, I mean, there's definitely going to be more and more opportunity, but that becomes a little harder now too. You got to be a little bit more dedicated. You got to research those areas. You got to, maybe get in the car, drive there, all that. Like definitely get in the car and drive there, especially as you're just getting acclimated to it. So what's your advice to somebody that wants to get into the space? Because I would think there's a couple different ways you can skin it, where you're purchasing these properties yourself or you're investing maybe passively in a fund or syndications. So I'm curious to the options that you see available and which ones you think fit, for each person's personality and just amount of time that they have.
If you want to invest actively in these properties, find those places that you go to visit, right? The little corner pizza shop, the building that it's in, the small 2, 3 tenant strip mall, underwrite that and see what the numbers look like. And I think you'll be amazed at how high our returns are in commercial. Excuse me. If you want to invest passively, uh, hit me up, right? It's crazy how the returns are so much higher in commercial. My very first syndication, I offered our investors, and this is going on 4 years. I offered them an 18% preferred return. Right now, 6 months into the deal, we were able to sell off an outlot to like a little coffee shop, a Scooters Coffee drive-through. So that was a huge additional return that was not in our pro forma. I bumped up their preferred return to 22%.
Wow.
So for the last 4 years, and everyone, I did this for a couple of reasons. One, mostly to make a statement to say, stop investing in multifamily. Look at what else is out there, right? So I bumped their preferred return up to 22%, and everyone said, hey, that's unsustainable. Sell that really quick. We're going on 4 years. We're just now selling it. So they're going to make a lot of money on sale. But for 4 years, every $100,000 they put in, they've been getting $22,000, which is insane, right? Now,
Sure.
That's a bit of an anomaly. We have other deals that will return either a 10% debt or we do the 8% pref, 50-50 split. But at the end of the day, we don't do boring deals that kick off minimal returns, right? We look for needles in a haystack with downside protection. So we look for deals that might have national tenants as anchors and they have a long lease. They have 6-7 years ahead of them, right? So we want to make sure our downside's protected. And we've never lost investor capital. We've never paused the distribution. We've never done a cash call. So when we say we're doing something, we've always done it historically. And so another big difference is we don't have to do a deal to keep our lights on, right? Where a lot of these large syndication companies, they've built a machine with an acquisition staff, a marketing staff, a dispo staff, investor relations staff. Well, they have to do deals to capture the fees on those deals to keep their lights on and keep this machine fed, right? I got 2 other people with me. I mean, I can keep the lights on without doing deals.
So I'm assuming from an acquisition standpoint, you have a lot of broker relationships. Do you guys do any outreach to owners or?
You'll be shocked. If a commercial broker has a deal, they know how to price it. So we're not getting a steal when a commercial broker lists it, unless, there's things that we do. We try to find lazy brokers. Where, I'll give you an example, an office building, they advertise as 8,000 square feet. I look at the picture and I'm thinking, wait a minute, something's off. They only gave you the size of the first floor, but it said total building square feet 8,000. So on the listing, when somebody sees it's $300 a foot for office, they're right away next. But you take a deeper dive and you realize it's 16,000 square feet, right? So we look for mispriced, mismarketed, or mismanaged deals.
Mm. Wow.
We have other commercial brokers that we just target because they don't list on LoopNet or Crexy. They still list on their homemade mom and pop website, right? So they don't get a lot of eyes on their deals. Residential realtors posting commercial deals is always great. Calling up for lease listings, right? If somebody has for a lease sign, there's a pain point. Let's see if we can help them solve that pain point. Let's see if we can dive in, right? Take this property off their hands. We look for businesses that are selling their business, and oh yeah, the real estate's included too, right? So a lot of different avenues. Commercial brokers are not really our source because they know how to market and price their listings.
That makes sense.
Well, yeah, look where no matter what you do, go against the herd. Look where no one else is looking, and stop following the herd.
Yeah, that makes a whole lot of sense. Less competition that way, right? So talk to me about the invest beyond multifamily. You know, if investor comes to you, what's the experience? It sounds like there's a lot of education, and then is it funds? Is it syndications? Is it a combination of both? What does that look like?
Are you talking about being an investor or our education platform?
Both, both. I'm curious because I'm assuming if I'm an investor and I don't know yet, you know what I mean, or this world's completely new to me, it seems like you have options, to start to educate yourself too. So I'm curious on both.
Yeah, being an investor with us, you just get put on our investor list. And when we have a deal, it gets blasted out to everybody, first come, first serve, right? The challenge with us, Peter, is there's no $40 million strip malls out there, right? Or they're few and far between, but there's 30, 40, $50 million apartment buildings. So our raises are much less than
Sure.
typical apartment raise. We might be raising 1 to 3 million at times, right? And that could be for a 10, $12 million deal. But most strip centers, office buildings, we're going to be in the $3 to $7 million range. So typically 20, 25% down. I like to come in for half the LP. So if I need a $2 million down payment, I'll put 1 million of my own money and raise 1 million from investors. Always less than a 5-year hold. Here's something else that I think people should really be cautious about. Right now, apartment syndicators have turned their 5-year syndications into generational wealth funds or 10-year or longer holds. I don't know how investors don't see through this, but anybody can outrun a bad decision in 10 years. The real estate market is naturally going to go up in 10 years. Rents 10 years at a time are going to be higher, right? But why are you giving somebody your money where they can outrun bad decisions and they're not held accountable for 10 years? Makes no sense, right? When times were good, everyone's turning and burning in 2, 3 years. But now the times are tough, but they still are doing these crappy deals. Here's a great idea. Let's just hold their money for 10 years. We don't have to answer to anybody, right?
Yeah.
10 years. So we will never hold a deal for more than 5 years. We'll give investors the option when we can to 1031 their money, but I don't think you should give your money to anybody for 10 years where you can't get it out.
So are these are syndications, or is it like a joint venture, or how's that?
Ours are syndications.
Okay.
Yeah, if there's a deal that's a higher risk, I'll take it down myself, right? I won't bring investors in. Ground up development deals, there's often a 6, 7 month period where there's no revenue coming in.
Sure.
So those I'll do myself. But the deals that minimize risk and have safer returns, we'll open up to investors.
Gotcha. And talk to me about the educational side. What do you offer there?
Uh, so during COVID, I had a handful of multifamily investors come to me and say, Ash, can we learn commercial from you? We've got COVID tenants that we can't evict. This laws are in their favor, and we can't find any good deals because multifamily's saturated. So I said, yeah, let's jump on a Zoom call. They got a few people together, 2 hours and 40 minutes on a Zoom call, gave them everything they needed to get started. And at the end of that call, they said, Ash, how do we keep learning from you? And I said, guys, at the time I was a one-man shop. I'm sorry, like I don't have the time for this. They kept pushing, pushing, pushing. Finally, I put some feelers out there. I got 20 people interested in learning commercial. Uh, Started a mastermind. Did it for, it was a 6-month program. And it's going to be one and done, right? I didn't want to be one of these coaches or gurus, man. I want to just keep doing deals. So after the first season, more people found out about it. I did season 2, 3, and then season 4. I said, this is absolutely the last one. Not doing it again. But we still have Tuesday calls from anybody I've ever mentored, right? Every Tuesday we meet for 3 hours.
Wow.
Go over people's deals. What are we learning? What lessons have we learned? And then, I stopped doing the whole mentoring thing other than my existing group of 80 people. Finally, I had 2 of my students that are course creators as well. They're marketing people. They kept trying to get me to create a course. I was against it. A year later, I had enough people that just kept saying, man, I wish you'd do the mastermind again. So we opened up the course, and that's how you can learn from me now. Just go to investbeyondmultifamily.com.
Gotcha.
And I'm sorry, one last thing. We've never had a single student lose money on a commercial deal in 4 years.
Wow. That's amazing. I'm curious, do you work with brokers on the leasing, or do you guys do that in-house as well?
Man, that's a great question. So we will most often just do that ourselves, unless there's an exception. It's not a typical 1,500, 2,000 square foot retail or office.
Yeah.
We had 40,000 square feet of vacancy in one big box building. So for that, we need a broker.
Yeah.
Right. When you have anomalies, you need a broker.
Sure. That makes sense. And they tend to have, relationships with certain types of tenants and things like that as well. So I could see in instances where it would make sense.
Yep.
Well, Ash, this has been a great conversation and a ton of information. And you mentioned a few times where people can find you, but just to put it at the end here, if people want to learn more, where can they learn more from you?
Go to Invest Beyond Multifamily. My email address is ash, ASH, at investbeyondmultifamily.com.
Awesome. Ash, well, thank you so much for being here. This was a great conversation. I appreciate your time.
Awesome, Peter. Thank you so much.